morning traders, welcome to the TMT stock market strategy video for Tuesday, November 15th. All right guys, real quick before we get into the analysis, just want to let you know that Trading Market Technicals is having a webinar tomorrow at 4:15. If you can, please click on the link here. It is absolutely free to register, and then click on webinar registration and fill out the box, and we'll save a seat for you. Seat is limited. We do have a lot of people subscribing for the webinar for tomorrow, and we're going to be talking about a lot of important things. Like, as you can see, we had our crazy move after the election. Give you a case in point, Russell 5 days straight up, exploding 5 days up, and most of the move, that move and the move in the market has happened in the overnight session. So, but what happens when you get to that point, right? When you're a day trader or you're a trader and you're sitting in front of your screens and you see that the futures are up 15 handles, what do? Well, that's dominating algorithms. Those are the algorithms just taking control of the market, and you have to deal with that. So we're going to show you how to deal with the algorithms in the high frequency trading. We're going to give you an idea on how to understand how a dark pool affects today's markets. We're also going to show you how professional traders use some specific trading tools that can give you an edge to succeed in these markets, okay? And that's what we use. We're going to show you what we use. We're not going to give you secrets and this is the last training that you're ever going to need, and that's just downright crazy and not true. We all have a systematic approach to trading, but we're going to show you how many professional traders and what they use and how they use it. All right, so come join. It's going to be a fun video. It's going to be a fun webinar. Again, tomorrow at 4:15. Just click on the home page and then get into the webinar registration, and then we will save you a seat. All right, moving forward, let's take a look at our analysis. We had a crazy move in the dollar, and I did mention that. I said no matter who's going to win, the dollar's going to rally. It usually does happen that way. It's only it's a matter of history repeating itself, and it has done so in every election. So the dollar had an explosive move up. We hit our second target here, as you can see, in a UUP. But now what's going to happen here? Now I'm looking for probably a pullback back to the 25.60. That'll be support. But let me take a look. Let's show you what's going on here in the USD. That's the USD dollar. You can also follow the future, the DX. This is very critical here, guys. 100. Now, we had an explosive move to the upside, as you can see here, and this is the election. That's the election night. I say that if we continue to move and we stay above 100, or even come back down to 99, which I believe we're trading. Yeah, we're trading about that. We're below that now. But if we continue to move higher and stay above 100, that's going to really hurt the stock market as well, because of the fact is it's more expensive. Oil is priced in US dollars. That's going to hurt oil as well. So there's a lot of things that's going to affect the stock market itself and commodities alike. So it's something that really needs to be paid attention to. So keep an eye on that, on the US dollar. And speaking of crude oil, just want to show you that we are at our point here at $43. I had mentioned this, and I blew this up a little bit more. I actually brought the chart in a little bit to show you that we had a trend line here. If we lose 43, that 42.5, we're going to go to 40, and then ultimately is going to be here at 37.75. That's going to be the bigger target area in crude oil. Let me just get rid of that. So you can see here, guys, it's really important to monitor. Now we have OPEC, the OPEC meeting. I believe it's in Istanbul, Turkey. So we'll see if that's going to generate any movement in what's going on in crude oil. Now, I'm not going to touch it. I'm not looking for. I'm looking for, and I mentioned this here, I'm looking for lower prices. Sure enough, we did get it. I had Fibonacci retracements on here. I took them off because it pretty much met all of our downside targets. But now we're coming into a critical juncture here. So, and we need, I like to see a new catalyst. If we're going to have any type of buying, come in and push crude oil back up to the 50 mark, we need a catalyst, and that could be the meeting. So I'm going to step aside and let this digest itself for the next few days and see what happens going into the OPEC meeting. Or there might be a catalyst before that where we can look to buy. But I think you'll get probably a bigger flush. Guys, like I said to you before, whether it be a production freeze, a production cut, there's an abundance of crude oil out there, and nobody wants to stop because they make money. These countries, that are just purely driven on producing oil and taking oil out of the ground. So you just have to realize that if you are trading the crude oil. So I'm taking a step back on this thing, but 42 needs to hold. Other than that, we get 40 and then 37.78, which is the slope here, and that's in crude. Okay, for you guys that are trading it now. Most important, let's talk about rates. As you can see, I had the ascending triangle here. Remember, I made this back in August, and I said, here's the measured move, 185. Well, we did back test it, which is normal. We held, and we started to explode higher. We took out that 200-day moving average, and look what happened. Look at where we are now, guys. This is something that cannot go unnoticed. You have to pay attention to the yields, because what's happening is that the yields are rising, right? The cost of goods, borrowing is going to be much more expensive, and what happens when you have a higher yield? Well, you get a lower bond market, right? And I mentioned this to you many times. Here's the TLT. Now we're coming into our big support area, and I mentioned this, and I show you this is also from our premium Pro Trader Premier video for our subscribers. This is just one daily little chart here, but I wanted to show you, and I'm gonna pause the video and get another chart out and show you the difference. And this is without our projected levels, and you could see it makes a big difference here. You could see, other than the fact where's support, and if I go back to it, you could see here now. So come check it out. It's a great tool, and this is just a daily chart. We bring it down into intraday charts, so you guys have the levels that you know that you can go and either short or get long into. All right. But anyway, back here to the daily chart of the TLT. We got a support here. Now this is to me is really interesting. When yields start to rise, and they rise really hard like that, you have to figure out that you're going to get some sort of a market sell-off. It's just inevitable. It happens all the time. We are coming into a holiday season where we're very, very bullish, so that might not happen till next year. It could happen. Could happen now, or might not happen. So you just have to pay attention. And just don't get caught up in the euphoria of buying. But with this is dangerous to me. This is the biggest caveat here of a market sell-off brewing, and in the cards, than without anything else. Okay, any other indicator, when yields are rising, that's a big no-no. And when bond markets are literally just crashing, it's not good for equities as well. When you say, oh, when a market sell-off, when bonds sell off gradually, sure, you're going to get a sector rotation money coming out of bonds and into the markets. But when you have something like this go on, and then you have the yields come back in here and literally explode, you have to be very, very careful. Pay attention, because at any given moment we can get a pretty nasty sell-off based on these rising yields. Okay, now what happens if the yields just start to roll back down again gradually? Then we might alleviate some sort of a market sell-off like that because of the yields, that is. Okay, I'm just making a point, so just use a little caution. All right, what happens with higher yields as well? Well, you get gold. Gold does not like a rising interest rate environment, and of course December's around the corner, as well as the Fed hiking rates, and I believe they're going to do so in December. Fed Fund Futures talking about, I think, an 80% chance that they're going to raise, so looks like they're going to, and gold does not like that. We talked about gold going into the 1200, 1220. It's funny, I got a couple of emails, oh, you're crazy, and this is when gold was up here, and I said, you know what, I've traded gold many for many years, and I've seen it. Once you get this, bam, this market breaks down from this huge area of support, it's only inevitable to get everybody long again, and then everybody just gets annihilated. And it's an unfortunate thing, but that's how the market works. Wants to get everybody one-sided, and then they want to create, meaning the market itself, creates the max pain for institutions and even for retail traders. Okay, where do we go? Well, I'm looking at the 1200 print here, guys. I'm looking at here. If we lose this area, you were going to get back to the 61.8% retracement. Now, I wanted to show you, let's take a look at the ETFs with our volume profiles. This here is important. We hit our first target. Our second target is going to be the 61.8% retracement in GLD. Now, remember, we have this volume zone here, right? We have these market profile volume zones. We have a thin zone. If we lose this area and we lose this 61.8%, I think you're going to flush right back down to January lows of 2016. That's just me, and like I said to you before, the markets create the most pain, the max pain for traders, and that's why Don't get caught up in a gold bug thing. Do your homework, do your analysis, make sure it holds up well to what you're reading or what you're following up with. Okay, even my own analysis here, GDX daily. See, same thing here with the Pro Trader Premier video. Just want to show you another sample. Without this, you would say, well, where's support? When you're a technician, you're going to see that support is over here, but it's just nice and easy. That's only on the daily chart, and we dial it down. So you can see here, nothing good here coming out of the RSI or MACD. Yes, we do get a little bit of a pop, but if we're going to buy GDX here, I think GDX could get down to $17, $18, right up in this area here. If we get into this area and we can base, then I'd be looking for a better play in GDX. I'm also starting to look at silver, by the way, and we'll put some work in silver. I'll do some analysis work and I'll put it out there for you guys. All right, Spiders ETF. You can see we had a gap fill area. We haven't gone anywhere, guys. Here in the S&P 500, we've been trading inside day for 3 days. We had the 2-day pop, and that was in the overnight session. So we're just kind of hovering in here. The big move is really going to be in the IWM, which I'll show you. You can see here 60-minute. Nothing really good here. We're starting to unwind our overbought, and we've gone sideways for 3 full days. So let's see what happens today going into today's trade. All right, so here's the Russell. Just crazy moves, explosive move. We have a lot of drug stocks in the Russell 2000. So as you can see here, drugs are benefiting for Donald Trump as the president to be. So we had a massive explosive move, and Russell, actually all of these moves happened. A lot of the move happened in the pre-market. A lot of the moves have been happening in the pre-market, so it's kind of stinks for the day trader. But again, if you don't trade the IWM, you're not looking to go into it and trade it. Very volatile index. All right, and lastly is the Qs. You can see here, Qs are doing terrible. The FANG stocks, the Amazons, the Google, the Netflix, they're just getting clobbered, and we're getting a sector rotation out of technology. So the question is, can the markets rally and we start a new bull market without technology? And that's yet to be seen. Have a great day, everybody. We'll see you tomorrow. Sorry about the long video, but I really wanted to get a point out here today. Very important. Have a great day, and we'll see you tomorrow.